The European Central Bank says that it intends to exit its QE programme by the end of the year. This is quantitative easing. The news saw the euro have its worst day in 8 months yesterday, and at the time of this interview, it's on track for its worst week in 19 months. Shewta Singh is Senior Economist and Managing Director at TS Lombard, joining us with some analysis of this. Why has the ECB gone down this route and this decision?
So the ECB, the ultra easy policy stance that the ECB has had for several years now is no longer needed. The Eurozone is growing at a healthy pace. It has been for a long time now. And the other side of the story is that the ECB also faces a scarcity of the assets that it can buy. Now, why, as you mentioned earlier, why is it that the why did the euro go lower even as the ECB announced an end to its QE program? Well, that's because of an extremely dovish forward guidance from Draghi, much more dovish than what markets were expecting.
So the effects of this, we saw the euro go down, but what you're saying is, I get the feeling, is that you think perhaps maybe that was the wrong inclination.
Yeah, I guess why the euro went down is because the terminal date for the QE program was anticipated by markets. That was priced in. What was not priced in was the extremely dovish forward guidance on rates from Draghi. In the press conference, he kept saying that the ECB stands ready to engage in whatever needs to be done if the situation does demand so. So yeah, an extremely dovish Draghi in terms of forward guidance, not expected by markets, pushed the euro down.
This exposes the southern states now to market forces. They've been protected from this because of the quantitative easing program that's been in place. The Italian vulnerability is shown by the rise in credit default swaps. Now, this is the cost of insuring Italian debt. How will the likes of Italy and some of the other southern states perform without that prop of QE?
Yeah, it's sort of the era of 100 basis spread is definitely behind us from both the demand side, from the domestic side, because we know that the ECB that the Italian authorities will adopt a more confrontational stance with the European authorities and sort of move towards a higher fiscal deficit. And at the same time, as you rightly pointed out, the end of QE means that spreads are likely to widen from here, and that probably explains why Draghi went overboard in terms of emphasizing the dovishness in terms of forward guidance, so as to sort of restrict the pressure on these relatively more vulnerable countries. And also, they are some of the most vulnerable to a strong euro. So Draghi has sort of helped ease that pressure to some extent. But for how long, it's difficult to say, because the euro is bound to strengthen because of fundamentals.
Data generally has disappointed of late across the Eurozone. How will the loss of QE impact that? Is that likely to change because of what's happened yesterday?
So the data disappointments have been quite severe relatively to the data disappointments we see in the rest of the world. Now, is that a cause to worry? We don't think so, because a lot of these disappointing data is coming from really elevated levels. Expectations were really extremely high, unsustainable levels, and there is some sort of pullback from ultra high growth rates that we saw towards the end of last year. Temporary factors explain a lot of the slowdown: bad weather conditions, strikes, timing of Easter. So we expect these things to growth to sort of rebound as these temporary factors fade.
What about inflation? This is one of the things, isn't it? The central banks have been targeting inflation. They want to see prices move up. Do you see inflation rising as it has been, albeit slowly? We
do expect inflation to accelerate in the euro area, but not at a rapid pace. One of the most convincing signs of a pickup in underlying price pressures for the ECB was an increase in negotiated wages to 1.9% in first quarter, as you can see here, which is one of the highest pace of growth in 6 years. So that sort of gave a sense of confidence to the ECB in terms of winding down its program. And we are seeing underlying inflation pressures pick up. Core inflation is edging higher, services inflation is edging higher, and we estimate our own super core inflation, which is a better measure of underlying strength in the economy, underlying price pressures, and that has also been inching up. but we will not be really looking at a rapid surge in inflation because of various factors, global factors. But yeah, inflation is picking up, and it will edge closer to the ECB's target.
I think we've got a chart here as well of the difference between the interest rate pictures between the Fed, the Bank of England, Bank of Japan and the ECB. How long do you think it's going to be before the ECB is going to be able to catch up with the Fed especially? I mean, the Fed is obviously in this tightening path. It's done 7 interest rate rises in the cycle. It's going to be a long time before we see the ECB catch up particularly. But when it does start to raise interest rates, do you see a rapid rise in interest rates, or do you think it'll be a gradual one here, one there, one somewhere else?
As you rightly pointed out, the catch-up will take a long time because the euro area is the economy is much behind the Fed, much behind the US in terms of its growth cycle. And I suspect we will not see a sustained rise, a rapid rise in interest rates, even in the US, which is, as we said, much ahead of the curve in terms of growth. The pace of increases, increase in interest rate has been really quite gradual, and for the ECB, it will be even more gradual. And that sort of brings us to the whole idea of this. People worry about liquidity conditions tightening suddenly, but it's something that we don't really envisage right now, because policymakers will be really extremely loose, will hold policy loose for a really long period of time, especially the ECB. Yeah.
Just going back to the euro, if we can, as a final question, do you see the euro rebounding from here? Do you think there's a play on the euro at this level, or do you think the US dollar will continue to get the upper hand?
We expect the euro to rebound from these levels based on fundamentals. The euro is undervalued. The eurozone is running historically high current account surplus. We expect eurozone growth to rebound. That means it becomes more attractive for equity investors, brings in more capital flows. So we do expect the euro to strengthen from here.
Good. Look, it's a pleasure. Thanks indeed for dropping by, explaining all the details of what went on Thursday from the European Central Bank. That's Shewta Singh, Senior Economist and Managing Director at TS Lombard. Subscribe to IG for educational content, company insight, financial analysis and expert commentary.